Clover was established in 1998 as a dairy cooperative in the Moy River area and is today a major national milk products producer and distributor. It listed on the JSE in December 2010. Clover has a market cap of 2.8 billion rand, a dividend yield of 1.8% and a price to earnings ratio of 14. Now, I come from the Natal Midlands, so I know this conglomerate well in the dairy space. How have we tracked? A little bit of volatility on the share price, relatively illiquid. Is that the reality here?
Look, it bumbled around and was owned by different private equity holders, but the co-op farmers down in the KZN area, your family people, they used to own like 12% of it, management, and it listed at 10 Rand a share in 2010. And since then, it's been, jacking up and jazzing up its business. Its CEO, Johan Forster, spends a lot of time talking to investors. And I must say, it has done well. Recent
results, look at it. I mean, it's around about 16 Rand now.
Looking good. So they also market and distribute, as you know, the cold chain products for Danone and some of those others. They've got lots of trucks going all over the show. Dairy products, I mean, it is a core kind of food niche. It's subject to its own problems. I mean, it's got a short cycle in terms of products. You have to be quite careful. But lately, they seem to have kind of gotten on top of things, paid a nice dividend, so they're moving ahead. And
the market rewarding them, as we said, Rob, at 16 Rand on Clover. Again, the question is, do you buy into the story at these heavy heights?
I think it's a little bit of an aggressive move now. So at 12, 13 Rand, yes, definitely. Now it's trading at 16 Rand. Maybe there'll be a slight pullback to enter, but the story as a whole is good. It's difficult to create a massive operational and distribution brand that they've got. So the barriers to entry are quite high on dairy, and they've spent a lot of money into new distribution as well, and they're getting their milk to last longer than anybody else's milk, fresh milk, so they can move their products over a few extra days compared to the competitors. So difficult market to get into. We really like Clover.
And that's what the investors like to hear, is that you've got a moat around the company in terms of the barriers to entry in the dairy business being high.
Look, what happens when companies like this that are established list and raise a bit of money in the process is it's hard to tell from the prospectus what their sustainable earnings level is going to be. And also the listing process is quite expensive. So you get costs related to that. So for the first year and a half or two, sometimes the market is taking some time to adjust to what the real earnings sustainable level is. And that's why I think you saw that move from 13 to 16 with the results coming out. The dividend was up quite nicely. The earnings were actually flat, but that was because of the sort of different number of shares in issue and raising capital and expenses and all of that. So I'm not saying every new listing is necessarily an opportunity in the same way, but in this case, there's definitely a sense. I think people are now saying, okay, that's kind of the earnings level, so let's compare it to AVI and and work.
What about the liquidity here? Is there, how much is held? Do you know what the free float is?
It trades about 4 million Rand a day, which is not bad, and that's improved. So when it listed, it didn't trade much at all. And that normally happens. As a share price gets going, the liquidity and the turnover starts to increase. So it's not too bad.
I'm going to rephrase the question I asked earlier in another way, in that has it run as hard as it's going to run?
I think longer term, we're going to see higher levels. I think that in the short term, we'll see a bit of a pullback on the stock. But I like it still.
When you say higher levels, can I push you on a number? Are we seeing 10%, 15% up from here? And over what time period?
I think they're going to try grow at about 10 to 12% return on equity every year. Depending on input costs on maize and fertilizer, their margin should stay. It's relatively inelastic, the milk sales and pricing that can get there. So I think we can see 20 Rand in this stock.
We chatted a little bit about Peter Matlara. I think it's only fair if we chat about Johan Forster as well at the helm, as you pointed out, of Clover. Do you like him? Do you think he's
he seems like a well-grounded sort of fellow and also quite good at the sort of strategic stuff. So they had this program called Cielo Blue, which sounds like sort of Spanish for blue sky. So that sounded good. And, they went about their business trying to get costs out of the business and look at new products, because if you've got a truck going everywhere, so I see they've got a bottled water brand, for example. So someone else is doing that for them, I think, and then they're just adding it onto the truck and so on and so forth. So I think
they've got the distribution, now they've just got to add the product to the distribution.
Additions. They've got like 14,000 points that they deliver stuff to. So I mean, I think there are still logistic challenges in the business, and as I said earlier, milk is not an easy product. The milk is all in the wrong part of the country. It all comes from Maritzburg. Sorry, not the wrong part of the country, a different part of the country.
I'm glad you see yourself in check there.
Where it's got to be is where the people are, which is obviously, you know, Gauteng and then you've got to move it around. But they've got that whole production for the long life products and the milk powders and all of that stuff tied up as well.
Hot or not, Rob, on Clover?
Hot on Clover.
Hot or not?
Sort of like 3 billion rand market cap, so beginning to put its head out. Yeah.
Hot or not?
Okay, let's go hot.